Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets today? Well, the Dow, it's kind of flat, but the Nasdaq's down 80 points, almost 100 points. Nasdaq's headed lower. All right. So basically, recently, we've been in a sideways pattern, right? A sideways pattern. I mean, we've been stuck at this 4,100 level on the S&P for a couple months now. We're 2 months ago, we're there. We're still there. All right, 4,100. All right, what do I think is going to happen? Well, I do think we're going to eventually come down. Now, if you look at the VIX, the VIX, it's very low. It's trading around 17 and change. Okay, so it's trading down here around 17, and when the VIX is low, it's time to go. That's the saying, right? Now, if you look at the options on the VIX, look at the options, and you look at them out at the end of May, the call options will be trading for about 5 times as much as the put options. Very interesting. So there's much more call options being bought. Now, what this tells me is that professional traders believe that the VIX will shoot up in volatility between now and the end of May. All right, so what happens when the VIX explodes higher? The volatility goes higher. Well, that means the market goes lower. And if it explodes higher, the market's going to drop quite a bit. Now, I'm not calling for a big crash in the market. I think it will be a slow drift down, but the drift will be down to about 20% lower than we're at now. At that 4,100, I think we'll get down to 3,400. This is just my take on the market. You may have a completely different take. Now, let's get over to the real estate market. Now, you all know I love to read the articles that come out over the weekend. Now, the latest article I was reading says that home buyers have lost their edge. Now, I bet you that most home buyers don't even realize that they had an edge. But apparently they've lost the edge because buying conditions are getting much worse. Now, what is the article talking about? The buying conditions getting much worse. Well, let's think about this. What the article goes on to say is that the sellers are not putting their home on the marketplace. Now, this is the spring selling season, but the sellers aren't putting their home on the marketplace. Now, the article is always funny. They say the sellers aren't putting their home on the marketplace because they're waiting for interest rates to drop, because they think that's when the buyers will come in. So they're waiting for the interest rates to drop back below 5% so the buyers can come in and push the house prices up higher, and that way they can get what Billy Bob got. Now, I know a lot of you are under the impression that everybody's locked in at a 3% rate and nobody's ever going to sell again. Nobody's going to get divorced, nobody's going to lose a job, and nobody's going to die. Now, here's a funny story about the divorce part. All right, so I have this couple, they're getting divorced. They're going through a divorce right now, right? Now, they were in love and they bought this house, and now they hate each other and they want to sell the house. But they can't sell the house because they're at 3% locked in. This goes back about a year from now. Okay, so they were getting divorced, and the divorce is still going on because they can't settle it because nobody wants to sell the house that's locked in at 3%. So what have they done for the last year with the house? Well, they rented it out. But what are rents doing? Well, they're not covering their mortgage payment. I'll tell you that. So this house is up in the El Dorado Hills, up above Sacramento area, and it was worth about $1.1 million. And if they had sold it when they were started the divorce proceedings, they could have got the $1.1 million. But now it's down around $900,000. Well, $900,000 is where it's at now, but they paid $850 for it, right? And so they put down $50,000. They got an $800,000 loan, but it's down at $900,000. Well, it's going to take them 6% to get out of that $60,000. Let's call it, and maybe they don't get 900. Maybe they keep waiting. Maybe they only get 850. Then they won't have anything to fight over, because right now they're fighting over that house, right? They're fighting over it. They want to keep it because they're locked in at 3%. Pretty soon they won't have to fight over it because they got negative equity. What they'll be fighting over is who's going to pay for the negative equity. So a lot of people getting divorced are trying to hold on to their house because because they're locked in at 3%, right? I think that's ludicrous. I think that's crazy. I think they should have sold it last year when I told them to. But no, Mike, we're locked in at 3%. Look, if I get a job loss, I'm going to keep my house because I'm locked in at 3%. Well, that's all great. How are you going to pay the mortgage? I haven't figured that part out yet, Mike. Well, what if you die? Well, I'm going to keep my house, right? I don't know. I think if you die, somebody else is going to sell that house. Look, there's all kinds of reasons. Life goes on. This 3% locked in. It's not how it's going to play out. It may look like it's playing out that way right now because we do have low inventory. I'll be the first to admit that. All right. So let's say that interest rates do come down. That's what a lot of people are waiting for. Now, I'll tell you what. You know what trumps mortgage rates? When mortgage rates come down, what trumps mortgage rates? Unemployment rates. When unemployment rates go up but mortgage rates come down, what happens to houses? Well, house prices go down even though mortgage rates are going down because people will be losing their job. They won't be able to afford the mortgage. So always remember that unemployment rates trump mortgage rates, okay? And we're getting a lot of layoffs right now. You see it in the news every day. Layoffs. But Mike, there's no inventory out there. In my area, nobody's selling. We have absolutely no inventory. Well, I'm going to give you 3 places that the inventory is going to come from. All right. So let's start with the investor. And I'm not talking about your average investor. I'm talking about the Airbnb investor, the one that bought 3 houses and has mortgages on each one of them, and he's trying to service his debt, but his rental rate is really falling off, and he's getting underwater farther and farther. These houses will be coming onto the marketplace from the Airbnb businesses. You know, you can buy these startup books, how to start an Airbnb business with very little money. Should have said how to lose your ass in the Airbnb business, because a lot of these Airbnb people are starting to lose their butt. That's what's happening right now. They're starting to lose out. They're going underwater, and these are going to start to come back onto the marketplace. They're going to dump them onto the marketplace. All right, so that's the number one place where some inventory is going to be coming on. And what's number 2? All right, let's go to number 2. How about foreclosures? That's right, foreclosures are spiking up. We haven't been able to foreclose on properties because we had that thing called the pandemic. But look at Wells Fargo has set aside $1.2 billion for loan losses, right? B of A set aside $931 million, and J.P. Morgan set aside $2.3 billion for loan losses. Why? Why are they setting this aside for loan losses? Maybe because nobody's paying their mortgage. You ever think about that? That could be part of the reason. Oh, commercial property too. That's just crashing and burning. Now, maybe that could be this straw that breaks the real estate back. Commercial comes down. All of a sudden, the real estate comes down. It could happen that way. It could play out that way. Nobody knows exactly how it's going to play out, but they're setting this money aside for loan losses. And how do I know that they're expecting these loan losses? Well, they're actually starting to contact me. They send me emails. They say, Mike, we're going to take back a lot of properties. Would you like to be onboarded as a broker of record so that we can dump these properties to you and you can make money selling them? Because the banks, they don't want to own the properties. You realize the banks, they can't sell the property themselves. They have to give it to a broker. And that's where I come in. I sell a lot of bank-owned properties back when they had the subprime crisis. I sold a lot of short sales. Short sales are going to be coming back. People think I'm crazy when I talk about this. And I know that my opinion that houses are going to be coming down is not the popular opinion. Well, let me ask you this. Now, what do you think is going to make the houses go up? Please leave me a comment. What's going to make the houses go up from here? Because I'll tell you this. If houses don't go up, they're going to be coming down because they're not going to stay at this level. The reason they're not going to stay at this level is because people cannot afford to live in the house they have now. They can't afford the payment on it. They can't afford the expenses on it. They can't afford the property taxes on it. Home ownership is expensive, and a lot of people are starting to drown. 1.5 million people are behind on their mortgage right now. These people are going to be dumping the properties on the market. Unless you have a reason why houses are going to double from here, houses are actually going to start to come down. Now, I know that's not popular, and I know that could never happen in your area. Your area is great, man. It only goes up, and that's good. That's real good. All right, so I said I was going to give you three things where the inventory is coming from. So number one, it's going to be from the investor, not just regular investors, but also Airbnb. Number two, it's going to be coming from foreclosures. People are going to be getting foreclosed upon with layoffs. When they lose their job, they're not going to be able to pay the mortgage. Where's the third one coming from? What's going to come from us? It's going to come from the baby boomers. Do you realize that over 50% of the houses right now are being sold by baby boomers? Now, why are baby boomers? Why are they selling their houses? Well, a lot of them, they have these McMansions. They want to get out of them. That's where all their nest egg is. All their money's tied up in their home, and they want to retire. If that home price starts to go down, they're not going to be able to retire. So they're selling their property. They're downsizing. Some of them are starting to rent. Some of them are moving into old folks' homes. Some of them are flat out dying. Now, I know in your area, nobody ever dies, but yeah, sometimes the baby boomers die. Sometimes people die a lot younger than us baby boomers. I have friends a lot younger than me that are starting to die. Really weird. I don't understand it. I'm not used to that. A lot of funerals to go to. I don't know what's going on. But anyway, so a lot of the inventory is going to be coming from baby boomers. Baby boomers make up 50% of all sellers right now, but that's going to pick up speed. The baby boomers are just starting to get out. See, I'm on the younger side of the baby boomers. The older ones, they're already getting out. They're already downsizing. They're already moving into the old folks home. They're already moving into the apartment to rent. They don't want the big yard. Big yard's a lot of upkeep. You got to mow the lawns. You got to do the yard work. You got to do the gardening. They don't want that anymore. And the repairs with air conditioner goes out, the washer goes out, the dishwasher, the ovens, things break in houses. I know that's shocking to a lot of people. A lot of people just rent, and then they call the landlord. They don't have to have those expenses. But a lot of the baby boomers, they don't want that expense anymore. They want to get out because that's where their nest egg is. Their nest egg is tied up in their home, and they want to dump the home onto the marketplace. So that's the three places where most of the inventory is coming from. Now, why is the inventory not going to sell though? When people just buy it, when all these buyers run into the market once they see the inventory? Well, no, it's not going to work like that. I know this is shocking to a lot of people, but that's not how this is going to play out. A lot of people don't even realize it. We're in the midst of a financial crisis. Now, so far, they've been able to paper over it, right? Silicon Valley Bank just print $500 billion. We'll paper right over that. Nobody will notice. Look, we're in a financial crisis. Credit is starting to tighten up, and when credit tightens up, people are not going to be able to get mortgages. Now, you know, most people buy a home with mortgages. Now, I will agree about a third of homes right now are selling for all cash because mortgage rates are high. People don't want to pay those high rates, so the rich people are actually paying cash because they can't get 7% on their money anywhere else, so they might as well not spend it on the mortgage. That way they don't have to pay that 7%. They'll just take it out of savings. If you're rich, that works, but 2 out of 3 people, they need a mortgage to buy it, and the credit's starting to tighten up. So you're not going to have these people coming to buy all this inventory. Well, then what's going to happen, Mike? Well, if there's no buyers and there's a lot of inventory, guess what? The market will shift, and it can shift like that. It can shift overnight. I've seen it happen before, and it's going to happen again. A lot of you young people, you've never seen the market shift. You haven't felt the pain of a market shift. Look I owned 3 houses once when the market shifted, and I was leveraged on all 3 of them. I almost came that close to declaring bankruptcy, but I did get the first one sold. That gave me a little breathing room. Then I got the second one sold. Then the third one. I got out. I made it out. But I'm telling you, when you are leveraged and you cannot sell, it's a scary thing. It's a scary thing. A lot of people are going to declare bankruptcy. A lot of people are going to go into foreclosure. A lot of businesses are going to go out of business. Look at Bed Bath Beyond. They just announced they're in bankruptcy, going out of business. And they're big. They're a successful company. Well, they were. They're not anymore, right? But a lot of businesses are going to go under. A lot of people are going to lose their jobs. And a lot of these businesses, well, they're homeowners. They're not going to be able to support their home anymore. And that's going to dump inventory onto the market. And once again, the buyers are not going to be able to buy because they can't get a mortgage. But Mike, my credit score is good. It's 800. I'm going to be able to get that mortgage. Maybe you will, maybe you won't. I'm telling you, things are changing, and when it changes, it can change fast. It can snowball downhill. Just wait till wait till next February. That'd be great, but wait till the end of the year before you start looking for properties. Things are changing right now. Things are changing quick. They're going down. That's my take. Just my take. I know a lot of people disagree with it because I hear about it all the time. Could never happen in my area, Mike. Things only go up, and I love that. If you like this stuff, give me the thumbs up. Why not? It's Monday. Everybody get out there. Have a great Monday, everybody. Bye-bye now.